hope you are well. Today is 13th of August 2024, and I'm going to be talking about a sector that is prone for a rally, which is cyclical stocks, especially retail stocks. This is my best pick at the moment. I think those stocks are prone for a rally, and we have seen how GB Hi-Fi and also Temple Webster today has those both stocks have recently reported, and the stock price has soared. And I think it's just a matter of time for other stocks as well, as long as they are reporting well, to start rising in price. Most importantly, I want to talk about those stocks because they are trading at technically discounted price at the moment, and that's when we want to be buying. We don't want to buy after those stocks have already rallied. We want to buy before. So the first stock is Kogan, which is one that we have been covered into this channel. I'm gonna go through the chart formation and show you why I think Kogan is prone for a spike, especially if the full year report comes positive as we are expecting. And then the other one is Satire Limited, which also is stock that we have been trading together with our VP members, and we are expecting a big bounce once those short traders start going away of these stocks. Let's have a look. I just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to chase 20 to 40% profit together with our VP member and setting up stop losses of 3 to 12%. So we not only chase profit but also protect our capital in case something goes wrong. Then once we complete the trade, we move on to another stock and potentially buy back this very same stock at lower price, and then we keep going and going and going. Now, if you like the channel, please subscribe, share this video with someone that you think would be interested in watching, and also I wanted to invite you to become a member of our free Facebook community we call Buy, Grow and Sell Strategy for Share Traders. We post a lot of great quality content, including access to some stock analysis, some of our results, and much more, free of charge. Also, remember we have a Facebook page as well, BG Trading, so make sure you follow there so you get the notification every time we post something in our community and in our page as well. Now let's move to the S&P ASX 200. As you can see here, which is XJO. As you can see here, the S&P ASX 200 has fell 6.39% last week after we had a huge sell-off on the Nikkei in Japan, as Japanese central bank has increased interest rates 25 points only. Everyone freaked out, okay? So everything collapsed. And then obviously we had this pretty strong pullback, which in my opinion, for the short term, was a very good buying opportunity, especially on strong names. Now, interesting enough, Nikkei has came back to same levels that it was after the before the crash. So it was just literally to wipe out some of the weak traders that cannot understand emotions and control or have a strategy to keep moving forwards by understanding the macroeconomics and the effects of effectively the effects of a central bank of Japan increasing interest rates, and also the effects of Fed potentially cutting rates by not only 25 points but 50 points. That's what most analysts are expecting now, as early as September, which is 1 month away from this video. So it's very important to understand that. Then obviously there's a threat of recession. If recession numbers are confirmed, then obviously we might have a further pullback on the stock market. We could see as a result of US sell-off, a potential further US sell-off, we could see S&P SX 200 coming back to the long-term moving average, which still would have been normal. As long as this stays on the top of this 250 moving average, 250 days moving average, I think we are pretty safe. At the moment, the S&P SX 200 is started trading within this channel, has bounced from the bottom of the channel, which was at 7,600 points, and we could see testing the all-time high once again in the short term. But I want to highlight this as we have election in the US and also potential recession, that we are very likely to see further turmoil on US markets, money shifting from tech into other sectors like safer sector or cyclicals, and if that happens, obviously we might have a sell-off on the Nasdaq, and then that will push down a S&P 500, and then ultimately would negatively affect the S&P SX 200. So you gotta just make sure you are protected. Don't over invest at the moment, would be my opinion on this topic right now. So just wait a little bit. Normally August and September, even October, are very high periods with high volatility, and historically obviously, and then everything starts sort of coming back by the end of the year, November, December. So I assume it would be safer to assume that November and December would be the best time to pump money back into the market. Having said that, I still think we need to explore the best trading opportunities, stocks that are currently trading at technically discounted price, or I would say on sale, and has strong fundamentals and positive outlook with a favorable macroeconomic outlook. Let's explore the first one, which is Kogan, stock that we have been covering in this channel. And once again, I've been telling my VP members, and also we even always review the same aspect of any particular stock that we are trading, that if the fundamentals are still strong and the company is trading at technically discounted price, patience is key, but most likely those stocks will bounce, and traders or investors will be rewarded soon or late, as long as you buy at technically discounted price. So now, first one, as I said, Kogan, KGN. So this is what I like on Kogan. First of all, if we use all the BGS 20 indicators, which is displaying on the chart on the Heikenach. Also, we set up supports, hypothetical support and resistance. We say hypothetical because there's no guarantees in the market that a specific area will actually be a support. But in this case, as you can see here, there's strong buying activity around $4. Every time Kogan falls around $4, or even if it goes below $4, but then a strong buying activity again, and a market buys the stock once again, as you can see today. So today is a pretty good proof of what I'm saying, as Kogan has bounced about 5% so far after just testing the $4 hypothetical resistance, like support level. Now the relative strength is shows a bullish divergence, which is really positive for a potential breakout to the upside, potential rally from here. We're not going to call breakout because it's not breaking anything. It's actually prone for a rally. We haven't seen some strong days here with strong volumes, and this is a stock here that it looks to me that is about changing the character here. Obviously, Kogan is always from the retail sector. It's kind of the ones that goes up and goes down the most, and at the moment the stock has felt about over 50%, like 54%, and offer, in our opinion, again, this is not a financial advice, but based on strong results on the FY24 fourth quarter, it has showed strong numbers. Despite we are in in a cost of living crisis. So it's in 13 years high interest rate environment. So this is very positive in my opinion. So I think Kogan is likely to hold around this level, and this is extremely a good opportunity should Kogan report in line to what we're expecting in a full year result, which comes in a couple of weeks, if not before. So Kogan for me is positive. Now let's talk about Satire Limited, which is the ASX code is CTT. This stock again, like, it's being highly manipulated. We also cover this, have been covering this in this channel. So the problem with this stock is, first of all, there was a lot of issues with media, like negative media, and the short trading activity. What happened with the CTT is that, you see this downtrend line here? This downtrend line here was unbelievably accurate. And as you can see, we had really strong days here with high volumes, pretty much in early July, where the stock went up like a 20+% in one day, but then bounced back, as you can see here. It touched this descendant support, resistance level there, and then touch down and then go down again, and then test it again at the low level because this trend is moving down, and then failed to break and went down again. And then a few weeks later it tested again, but it goes down to the next level. Now we haven't seen a confirmed breakout, but the current chart formation shows me that we might have something very interesting here, which could be a double bottom formation. Now I wanted to emphasize the fact that this company is still reporting very strongly. Apart from the last quarter, which analysts were expecting the company not to be profitable, it has been profitable all over FY23 and mostly of FY24. And it's growing strongly. So I'm always want to have a strong, high quality growth company into my portfolio. And arguably, in our opinion, we've been running businesses for many years here in Australia, and we believe this company has a competitive advantage. Its business model is it's very sustainable, and this simply for the fact this company has the ability to start in a new market at a very low cost and very effectively, okay, which is not for everyone. So it's not easy to break through a new market. So they did just launch in China last month, and in the beauty market, which is huge, and I'm expecting strong numbers to start popping up. If not in this, still in this last financial year, in this upcoming financial year, FY25, that's where we should have the reflection of those numbers now in FY25. But the upcoming result is still yet to be seen. As I say, I like this double bottom formation. Obviously, we don't want the stock to break out from a $1 hypothetical support level, but we still need a confirmation of this downtrend is broken. We haven't seen that yet, but once we have the confirmation, we could see a strong rally towards $2 and even further, according to my experience in buying strong companies with positive fundamentals, strong growth outlook at technically discounted price. Okay, we saw that with Zip, we saw that with Tyro when it was trading at 70 cents, we saw that with Megaport, we saw that with EML when it was trading around 50 cents, and we saw that also with a Appen as well, which has recently moved from 40 cents range into 80 cents. Let's see how it reflects in Satire. So I think we need a little bit patience, but the macroeconomic environment is becoming very, very favorable. This stock is now trading at incredible 76% below its recent high, which was just recorded in March this year. Stock was trading just under $5. Unbelievable. A lot of, obviously, there was some director selling on a consistent basis, but obviously it doesn't look good for the market. But now we are extremely de-risked from the share price, from the technical aspect of this particular stock. Okay, so looking for change of character here. Still need to wait potentially few more weeks for confirmation. We need the patience on this one. The stock don't just bounce straight away, but I'm expecting this to bounce soon or late for the reasons I have just explained in this video. Guys, I'm going to finish this video now, and then I'm going to be publishing another video later on with all the stocks that we think are trading at technically discounted price and we see strong value at the current levels. Okay, I just want to separate cyclical stocks like this one, like retail stocks, from the other stocks that we are going to be chatting in the next video. Okay, so let us know what you think about those two stocks that we have been talking about for a few weeks already in this channel. Think there's an opportunity here at the current price, or you think those stocks could fall much more because the business model, for any reason you don't like, why you don't like. Just always explain to us why you think your opinions, back up your opinion, don't just put whatever you think without backing up your opinion. Is very important because you want to create a not only have a high quality content, but also have a high quality conversation between the viewers, between our audience. So that's how we stimulate here people to trade more effectively and wisely into the stock market, understanding the fundamentals and the technical aspects of the stocks. Thank you very much. I'll see you in the next video. Bye.